Good afternoon, shareholders, analysts, potential investors, ladies and gentlemen. The time is 3 p.m. Nigerian time, and I'd like to welcome you to the first quarter 2026 investors and analyst conference call. My name is Kayode Fadamsi. I am the Group CEO of AVA Capital PLC. With me in the room, I have Moyo Drojaye, the head of our trustees business at AVA Trustees Limited. Joke Ganiu, Managing Director, AVA Securities Limited. Akim Raining, the Group CFO. Abiola Ahmed, the head investment banking at AVA Capital PLC. Omotola Lois, head investor relations, and joining online, I have Omolanli Ekanem, Managing Director of AVA Trustees Limited. I will kick off today's call by going through my statement. A copy of that statement is hosted on the website if you want to go through it again. After which, I will take the summary of the investor presentation. Then we'll take the questions and answers after the presentation. The 2026 financial year has opened within an environment that continues to evolve, presenting both challenges and opportunities for businesses operating in Nigeria and Africa at large. Policy reform in several past years remain evident. Tight monetary conditions, elevated interest rates, and moderating inflation continue to shape economic activities. While these dynamics have sustained a degree of uncertainty, they have also contributed to a more structured and disciplined financial system. Encouraging early indicators in 2026 point to a gradual stabilizing macroeconomic environment, improved foreign exchange liquidity, continued policy coordination, and resilience across key sectors, particularly services, have supported economic activity. For the financial services and capital market industry, this has translated into sustained market participation, underpinned by strong investors' interest in yield-generating instruments, increased demand for structured financial solutions, and a continued focus on liquidity management and capital preservation. The Nigerian capital market has remained active, with increased transaction volumes and deeper engagement from both institutional and retail investors. These trends continue to create meaningful opportunities for firms with capacity to develop innovative, client-focused solutions while maintaining disciplined execution. I'd like to talk a bit about the group performance before I go to the actual presentation. Against this backdrop, AVA Capital PLC has delivered a strong first quarter performance, reflecting continued momentum in the execution of our strategy. We have noted considerable growth in core operating income, particularly from fee-based and commission-based activities, alongside improved balance sheet strength. This performance builds on the strategic repositioning undertaken in the prior year, with 2025 serving as the foundation for the growth and expansion now being realized. The company's revenue grew by 158%, driven by a 324.5% increase in fee and commission income, reflecting the significant progress we made in scaling the business and improving the quality and sustainability of earnings. Our cost-to-income ratio improved substantially from 66% in Q1 2025 to 28% in the current quarter, while the profit after tax margin strengthened to 53%, up from 25% in Q1 2025. The company also recorded notable growth in shareholders' fund, supported by a 128% increase in retained earnings, further reinforcing our capital base and long-term financial resilience. During the period, the group continued to strengthen its market position across key operating and strategic metrics. Our customer base is now at around 4,500, with the long-term ambition of reaching 100 customers by 2030. Profitability remains strong with a net profit margin of 34%, outperforming the peer average of 30%. This reflects the efficiency, resilience, and sustainability of our business model. The group currently manages 4 funds and remain focused on expanding this portfolio to 10 funds by 2030. Our transaction sponsor ranking according to FMDQ Private Market Noting Transaction Sponsor League from inception to December 2025 puts us currently at number 3, highlighting strong execution capability and supporting our long objective to always remain a top 10 market player. Physical expansion remains a key strategic priority. We currently operate 3 business branches. We plan to increase this to 4 branches by 2027 and 10 branches by 2030, enabling broader market reach and deeper client engagement. In asset management, our funds under management ranking currently stands at 40. We have set a clear ambition to advance into top 10 by 2030, further strengthening our competitive position in the industry. Our performance is anchored in 3 key strategic pillars. 1, recurring revenue quality. The increasing contribution of stable recurring revenue stream enhances earnings visibility and reduces volatility, reinforcing the long-term sustainability of our business model. 2, operating efficiency. Improved operating efficiency as scale benefits and cost discipline translate into stronger profitability margin and a structurally low cost to income ratio. 3, risk discipline. A disciplined approach to risk management supports balance sheet resilience and positions the group to navigate a dynamic operating environment with confidence. At a broader level, our progress reflects the strength of our integrated financial services platform. The ability to deliver complementary solutions across our businesses remains central to our value proposition, enabling us to respond effectively to evolving client needs. We have continued to deepen collaboration across the group, enhancing our execution capabilities and strengthening our position as a trusted partner to our clients. Our outlook, looking ahead, our strategic priorities remain clear. We will continue to deepen client relationships, expand our presence across key market segments, and further strengthen our recurring income base. At the same time, we remain focused on preserving balance sheet strength, maintaining prudent risk management, and driving operational efficiencies through targeted investment in technology, talent, and processes. We are also focused on strengthening each of our business lines with leveraging the of our integrated platform. This includes enhancing our advisory capabilities, broadening our investment offering, and reinforcing our execution capacity across the group, all aimed at delivering improved scale, greater consistency in earning, and sustained long-term value creation. While near-term macroeconomic conditions may continue to evolve, we remain optimistic about the outlook for Nigerian financial markets. The ongoing impact of structural reform, increasing market sophistication, and a growing demand for professional financial services continue to create meaningful opportunities. The group is well positioned to capitalize on these opportunities, and we remain committed to consistent execution, sustainable growth, and the delivery of long-term value to our stakeholders. I thank our clients for their continued trust, our shareholders for their support, and our team for their dedication and commitment to delivering excellence. I also intend to appreciate all our other stakeholders for their continued interest and support of AVA Capital since growth journey. Thank you. So I'll go to the presentation now. The bulk of the presentation, the key preliminary slide, we presented at our full year 2025 investors conference call. The video recording of that call is on our website under the investor relations section. If you miss it, you can just go there and you can listen end to end so that you can follow our story effectively. So I'll not dwell too much on overview, visions, and vision, and some of the things that we have done around ESG. I spoke at length on that during our full year call. And I mean, if you have specific questions on this call, you can ask me. I could refresh it, but I don't want to just, so that we leave enough time for questions. Our group comprises of 4 main businesses. AVA Capital PLC houses our investment banking license. So we are issuing out license to the Securities and Exchange Commission. And we also, AVA Capital PLC, as majority shareholding in AVA Global Asset Managers, fund management and investment management license to Securities and Exchange Commission. AVA Trustees has the trustees license, and AVA Securities has the license for both the Nigerian Exchange Limited and the Securities and Exchange Commission. Slide 6 speaks to what we have been doing since 2017, when we kicked off with the investment banking license, up to 2026. A number of the awards that we have received from FMPQ and the Nigerian Exchange Limited is all listed here. And the fund that we are listed, interestingly, by tomorrow, the AVA Infrastructure Fund will be paying its full year dividend of over 73,000. And it is $1 million per unit fund, and it's listed for the last 2 years on the Nigerian Exchange Limited. In fact, we won an award from the Nigerian Exchange Limited for listing the largest fund on the Nigerian Exchange Limited. The AVA Infrastructure Fund, by the time we pay the full year dividend, will have paid about 17.3% dividend yield on our investors. That is really funds in that category. For national presence, we are currently in Lagos, Port Harcourt, and Abuja. On the ESG practices, we care about the environment. We have a very strong governance culture, and we make our social impact very bold. Again, as I say, the details of that and the specific things that we do is clearly and fully spoken for and spoken to a full year investors conference call. But I'll quickly mention, a good percentage of our revenue to develop human capacity. This is all for better performance in the future. So we continue to spend in that area. We have about 700 plus SME businesses, and we have about 50% female representation in our management and board. Now, I'll speak to the operating environment generally year to date. The first quarter in January, government signal transition from form implementation to policy consolidation. Sustained monetary tightening supported by yield attractiveness and anchored inflation. There's also relative stability in FX market supported by foreign investors' confidence. February monetary policy easing commenced, benchmark rates reduced, that is the NPR, reflecting moderating inflation. Interestingly, as we all know, cost of energy has gone up because of the war that is happening around Middle East with Iran, US, and Israel. And we believe that by the time the inflation figures come in, might be, tapering up this time. So we will watch out what the monetary policy rate will be at the next MPC. The fiscal reforms strengthen transparency. Oil revenues fully channeled through federation accounts. Improved fiscal discipline supported by sovereign credit perception. March further effects liberalization measure enhanced market efficiency and deepen liquidity. Realization of FX repatriation for oil export improved FX supply, and there was increased capital mobility, which strengthened investors' confidence and foreign portfolio inflows. Q2 started this April, and external shock from global oil market disruption introduced renewed inflationary pressure, which was what I was talking to earlier. Our government initiated engagement with multilateral institutions for macroeconomic support, and planned import duty adjustment aimed at easing cost pressures were introduced. The macroeconomic indicators are plotted here. As we said, headline inflation by the end of Q1 is about 15.06, but with all indications, there might be likely, an increase in inflation because a lot of increase into the inflation figures, are going up. If that happens, we'll watch what Central Bank of Nigeria will guide in their next MPC rate. But the real GDP continues to grow, and there's stabilization in the position on the dollar exchange rate to the naira. And now to our financial highlights, which is where I want to dwell. I discuss and take the bulk of the questions today, but also I love to take questions from every other section. You see that the group figure, because of the restructuring that happened in December, we didn't have the group this time last year, so there's really nothing structured that you can compare the group figures against. But the company, which is the investment banking business, existed last year, so there's basis for comparison, which is where we've done most of the comparison that we have. And as you can see on this slide 14, there was a revenue increase about 2.6 times from 139 million to 359 million for the first quarter. Operating expense grew slightly from 91 million to 103, and profit before tax grew by 5.4 times from 47.7 to 255.5. Income tax also grew similarly. Again, that's just, we're just guiding that figure. It's usually not the actual tax that is paid, but you have to make provisions for it. Profit after tax also grew. Total asset grew from 2025 December as a full year audited by 1.1 times, which speaks to the retained earnings and the consolidation of additional capital this year. And total liabilities also increased slightly. Profit margin grew. There was a plus 36.9%. It grew from a margin of 34.3 to 71.2, and net profit margin by 52.7. Our cost to income ratio reduced from 65.7 to 28.8. But when you look at the group figure, it's about at the end of full year, we had a group cost to income of 46. There was a question around that. And the reason for this increase is in note 3 in the keynotes, right? Because we also want to check, it's significant that we reduced on the company level from 65.7 last year to 28.8 because of our increased revenue. But from end of year to first quarter, there's a slight increase in the group cost to income at 49.9. And that is driven largely by the position expense incurred on our new head office building and increased fuel and diesel prices, cost of running business generally, for most businesses that operate within Nigeria. And I believe to a large extent globally, cost of doing business has increased. Hence, that I will continue to watch that ratio. We continue to work hard to ensure that we bring it below at 46% that we had a full year. Return on equity is about 23.6 from 8.5 for the company from Q1 2025 to 2026. The total revenue for the company grew notably, as I've said. Profit margins for the company also increased significantly by more than 5 times. And total assets for the group grew 2.9 times to 56.48 from 19.14 in December 2025, driven primarily by substantial increase in clients' investment and deposit and a strong liquidity position reflecting increased clients' confidence and expansion in group's investment management activities. There's some ratios that we've plotted out here. The group PAT breakdown. You see the portion from fee and commission income at 314 million. The portion from interest income 418. Other income is 40.33, and operating expenses at 378 million. And income tax 129. PAT stands at 263. We just felt that the component of the revenue should be broken down. The income statement year on year, we just plotted the graph to let you see the improvements. PBT margin improved significantly, 71%. It's also spoken to it in the presentation of financials. Cost to income ratio improved to 29% in 2026 from 66%. Fee and commission income grew 4.6 times, and net profit margin rose to 52.7 from 25.4, which is improved earnings quality. We also charted the income statement to show you the fee income, interest income, and other income from 2025 to 2026. I'd like to speak to our strategic ambition. There's some strategic ambition that we speak to at our full year, and we just want to put it here so that we continue to track it and continue to become accountable to shareholders, to analysts, and to potential investors and all stakeholders. So we have guided this information that this is how we want to grow over the years, strategically in the next 4 years. Currently, we have about 4,500 plus customers. We are guided by 2030, and with the help of technology, I will grow that to 100,000 customers. That's the goal. So we continue to track it. Profitability, net profit margin is 34% for us. It's slightly ahead of the peer average at 30%. We'll continue to work hard to increase well and we ensure that our operation is simple, and we continue to probably guide ourselves to continue to lead peers. We have 4 funds in our asset management business right now, mutual and infrastructure. And by 2030, we want to have about 10 funds. We hope that we will add a fund before the end of 2026. We continue to see the best time to make that happen. We have guided that we want to be top 10 in the industry in major matrices. And one of them, if you go to the FMDQ private market, private FMDQ website, you see a private market noting transaction sponsor from inception till December 2025. And there we are ranked number 3. We are top 3 of all times in transactions that we brought to the FMDQ for noting. We have 3 branches across the country. We hope that by 2027 we add an additional subject to our pulse, and we grow that gradually to 10 by 2030. Funds under management amongst peers in asset management business We are ranked 40 currently, and there's a lot of work to do in terms of share growth. You can see some significant growth in the first quarter result. We continue to work hard to build this share, stable core funds under management so that we continue to move towards top 10. We'll be adding some other strategic ambition trackers by next quarter. We'll be tracking our positioning in securities trading and in every other well-established tracking avenues that we have. We'll be putting there so that it will encourage us to chase our top 10, and we will show you where we are quarter after quarter. The appendix shows the things that we have presented. Our people spoke to it in the first quarter at the full year investors conference call. Listen to it, and you can actually read through it. With that, I believe that we have come to the end of the presentation of our financials, and I will open the floor to questions to myself and my colleagues that are helping me on the call so that we can take a deep dive on the presentation. Thank you. And again, thanks for listening. Thank you. Just to say that this statement that I read out, the investors presentation, the management accounts for Q1, these accounts, they are all fact sheet. They are all our 5 things already posted on our investor relations section of our website. This recording will be posted latest by 4 p.m. tomorrow. Also on the website, if you want to listen to it again. And yes, we can take the Q&A now. Thank you. There are any questions, it will be a good time to ask the questions. Thank you. I have my able colleagues here willing to help with the answering of the questions. Okay, in the absence of questions, I'll take it that the presentation was crystal, it was clear. The trackers for our ambition, our strategic trackers are also very clear. But if there are questions you have for us, probably after listening to this recording or after reading the presentation again, you can reach out to Lois Omotola at Investor Relations at AVA Capital PLC, avacapitalgroup.com is in those presentation. Or you can reach out to me, here at avacapitalgroup.com as well. I will be willing to respond on email to those questions that you may have. I and my colleague, we thank you for listening in this afternoon, and we wish you that you enjoy the rest of it. Thank you very much.